Hello, it's John Piper with the weekend video, and it's Saturday the 11th of March. Thought I'd start with gold today. We have the low there, passive move there, ABC here. That's all okay. We then saw a rally from here up to here, about 140 points. So the 50% retracement level is around 1190, and 38.2 is around 1210. So this decline has now taken us in between those two levels, and the 200-day moving average is around 1260 still. So right now we have a case that we could see a bounce. Let's kind of look at something a little bit shorter. Right, this is the hourly chart. So you can see the peak here, A, B, C, quite a sharp ABC, but 1200 is obviously a key level as well. I said the 50% is down here somewhere, 38.2 around 1210. So I have got the beginnings of a possible bounce there. It's rather early days. I mean, clearly the 1200 is an important level, so those you want to buy with the stop below there. There is some security in doing that. It depends on the kind of trading you like to do. Let's go down another level. Again, with the 5-minute chart, we don't see a huge amount more really. I mean, this pattern is, there's the low. Here's 1200, so we've broken below it, false break, bounced up again, retested, bounced again, but all very short term. And so far, if you look at the low here on 1195, so up here we're up $10, which is about a 1% move by gold. Right, if we look at the chart of Barrick Gold, one of the holdings I have in the gold market, you'll see that firstly the rally off this low, 14, was around 30%, so a lot stronger than the rally on gold. Similarly, the small bounce where gold has seen 1%, Barrick Gold has seen roughly a 5% bounce here, which is a bit more significant. And often one does see the gold shares rally ahead of gold itself, and so there is a better case maybe that things are looking up for gold and silver at this time. I wouldn't go too berserk on this. I mean, if you're not holding gold shares, gold coins, etc., then that's something else. I mean, I think an investment situation, but for trading purposes with geared instruments, you may prefer to want a bit more before going in. But as I say, my long-term call is that we're going up on these markets. All right, looking at the FTSE chart, this is a daily chart. Go back to the low in 2016. 1, 2, 3, 4. 1, 2, 3, 4. So this remains a fifth of a fifth. What's happening at the moment is unclear, but long term, very clear pattern here. That got taken out, which is as it ought to have been. Counts as a fifth wave here, but quite what's happening within that fifth wave is something else. But we should be, I mean, right on the point where we should see a major peak on FTSE. Let's go down a leg. Okay, this is where the fifth of a fifth started. So we can count 1, 2, 3, A, B, C, 4, and then this final fifth of a fifth, pattern is really breaking down rather well here. But the fifth wave seems to have vanished. Now, if you read the excellent book by Tony Plummer, who contributed very kindly to both my Way to Trade books, he wrote a book called The Price Pulse, and explained how there are major forces in the market. Clearly there's a big up force coming in, or has come in. However, if there's now a major downforce also exerting its influence, then that could explain why this final fifth of a fifth has not actually formed, because the negative forces are becoming too strong. What we would normally see, or what we might see here in Elliott terms, is a failure, i.e. you get a 1, 2, 3. We then get the fourth wave, which say could be down to A, B, C. Fifth wave failure. Well, this is a particularly truncated affair, and then the waves start coming in at that point. Hard to be too sure here. Perhaps the fourth wave just became extended. Perhaps this thing here is the fifth wave. So let's go down another leg. And this rally here does have a 5-wave form. 1, 2, 3, 4, 5. So it rather depends on whether or not this current action is corrective or impulsive. It looks like it just needs one more sell-off, down to 7320 maybe. A solid bounce there would allow for one more move to new highs. If that doesn't hold and we start accelerating down from there, that would suggest that we have the peak is actually in on FTSE. So that's something to watch out for next week. And I'll be updating obviously the subscribers. But that does look to me like we're seeing a major peak at this point in time. Anyway, that's all for today. If you found it interesting and useful, I'll back the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.